The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, it's great to be here bringing information about taxes to you. We're going to talk about taxes in general, and then we'll be getting into some tax planning, also IRS problem resolution, and how you can go about solving tax problems for yourself and, helping you through that and down the road. One of the things that we always laugh about, and I get to get out and talk a lot at OIDA, which is Owner Operator Independent Drivers Association, Truck to Success seminars. We talk about taxes. We talk about how to reduce those taxes for you, but we also talk about the history of taxes as well. When this country was first founded, taxes were actually collected by the states and then remitted to the federal government. It really wasn't until roughly the Civil War that they started assessing taxes on on individuals. And then the current taxes that we're under, this tax structure, came about in about 1913. If you can imagine, back then, the tax code wasn't very long, and it was a very low interest tax rate. You're talking about maybe 1% on people, and that was about it. So, what we're looking at is saying, how do we get from that 1% to today? And, the Constitution gives the government the right to assess taxes. A lot of debate out there whether it's right or wrong, how they do it. We're not going to get into that part of it. But the Civil War basically led to the creation of the first, U.S. income tax. And then the actual code came into effect in 1913, and it still exists here today in 2024. With these taxes, the rates were, like I said, 1%. They actually went up in about World War I to the highest rate of being about 80%. And then it came back down to about 28, 27%, somewhere in there, and then shot back up into the 90% was the highest bracket. And then you saw tax relief come in 1981 when Ronald Reagan was in office and greatly reduced the top marginal bracket. And then that marginal bracket has come down. Today's current tax code came about in 2017 with President Trump. And today's tax code is where you have a top marginal tax rate of right around 36%. We also have, for those high income earners, we also have an extra Medicare tax out there to help Medicare, Medicaid, and fund that. So there is additional taxes out there depending on how much money that you're making and what your taxable income is. So when we get into talking about taxes, what we're looking to do is how do we reduce these taxes for you and everyday Americans? Whether you are a W-2 employee, whether you are self-employed or a business owner or have a LLC or an S Corp or even an Inc., you've got to find ways to reduce those taxes. Because when you're self-employed, you're not only paying the federal tax rate, but you're also paying self-employment taxes. Now, for those of you that are not self-employed or thinking about being self-employed, what are those self-employment taxes? Well, that's your Social Security and Medicare. Now, as a W-2 employee, your company pays half and you pay half. But when you're self-employed, you pay it all, which is the 15.3%. That is a tough ball of wax to take right off the top. If you're self-employed making $100,000, that's $15,300 right there that you're going to pay for Social Security and Medicare. So you got to find ways to reduce those taxes. Now, I get questions, off and on, is it right that you're going to have these tax rates and be assessed these tax rates and be that high? Well, it's in the tax code. Your congressman and our congressman and president has to sign off and approve it and pass legislation and supposedly pass a budget, as well. But what we need to do is find ways through tax planning to reduce those taxes. Now, you got to remember, the U.S. tax code is 73,954 pages long. That's right, 73,954 pages long. Some of the taxes seem simple when you're looking at them on the surface. You're filling out your 1040 and you're going through filing your taxes. It seems relatively simple. But you got to think about it. As a self-employed owner-operator, business owner, there's a lot of pages there that you need to be aware of, that you need to use to reduce those taxes. Now, is it right to reduce taxes? Absolutely. One of my favorite quotes is from former Supreme Court Chief Justice William Rehnquist, and he said, "There is nothing wrong with a strategy to avoid the payment of taxes. The Internal Revenue Code doesn't prevent it." Matter of fact, my opinion, the Internal Revenue Code lays out the roadmaps to reducing those taxes. So, when we're going down to find ways for those that are self-employed to find every loophole, every strategy to make the taxes more reasonable, that is what you've got to plan to do. They talk about taxing the rich, and they talk about the rich not paying their fair share. Well, the rich have tax professionals that are going to be helping them find every loophole to pay less taxes. And that's really the idea behind, tax planning, is making sure that you're getting every deduction that you can possibly get to reduce those taxes. So, people ask, hey, should I use a professional to do my taxes? If you're looking for the loopholes, you're looking for the ways to save money, yes, you should absolutely be using a professional to do your taxes. That's just not using the next door neighbor who doesn't have any credentials, doesn't have any licenses, but they say, hey, I'm able to save as much money on my taxes because I do this, this, and this. Doesn't make it right. You really need to have somebody that knows what they're doing, working with you hand in hand to reduce those taxes. Now, remember, Judge Rehnquist said there is nothing wrong with a strategy to avoid the payment of taxes. And the Internal Revenue Code isn't preventing it. We're helping you find that roadmap to reduce those taxes to the lowest level allowed by law. Now, that's the fun part about what we get to do. And we get to talk about it. We get to talk about tax planning. And why is tax planning important? Because it's the key to your financial defense. Tax planning is also going to guarantee you results, because you're going to put a plan in place. And as long as you follow that plan, then you're going to be able to reduce those federal income taxes, state income taxes, self-employment taxes, and get those down to the lowest amount that we can possibly get it down to keep more money in your pocket. Because, in this day and age, that is what we're concerned with, is actually getting taxes down to the lowest amount to put more money in your pocket, to reduce the burden of taxes so you can pay your mortgage, you buy food, employ more people. I mean, that is the end of the day. If you're in a small business or you're a growing employer, you want to be able to employ more people. You want to be able to put more people to work. And that's how, we're going to look at things and get those goals. Now, what we're going to do is, shortly here after this break, we're going to talk a little bit more about tax deductions and getting that tax rate down to the lowest marginal bracket you can possibly do. So we'll return right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking about, taxes. We're talking about the main taxes that you're going to face as whether you're a W-2 employee, and then also if you are self-employed business owner, owner-operator, truck driver, running your own business, and you're looking for ways to reduce those taxes. The first thing I want to tell you is make sure you click subscribe to our podcast at taxtalksforyou.com. We really want to get all the subscribers out there. We want to keep you up to date on what's happening in the tax code and the tax world out there. And this is one of the best ways to do it. You can join us every Monday at 10 o'clock Eastern time for this wonderful tax talk and being able to talk about taxes with you. If you got questions, you can shoot us questions as well through the radio station here, and we'll answer those questions as they come in as well. We're also going back and talking about two main types of taxes. You've got your federal and state income tax, and that is calculated on your tax return. As a company employee or W-2, you're going to have income taxes that were estimated and withheld from your check. As a self-employed business owner, owner-operator, truck driver, you're going to be responsible for the estimation and payment of those taxes, just like if you were a W-2 employee, except it's not going to be withheld from your paycheck. You're going to make estimated tax payments. The second side of the taxes is also what we're talking about, self-employment taxes. And those taxes are made up of two parts. Social Security, that's going to be taxed up to $168,000. and that's 12.4%. And then as the other side of that is the Medicare, which is the 2.9%, and that goes unlimited. Now, Social Security for, like I said, for 2024, the limit is at 168,000. It's projected to be about 174,900 in 2025. In order to government to look at saving Social Security, I can see those rates going up even more, or I can see them taking off the limits at some point and taxing everybody to the max of their income. Unfortunately, with Social Security, as much as we all pay into it, we may not be getting as much of it back as if we were contributing all to our own retirement accounts. So you could see now, what happens is that if you don't take all the deductions that you're allowed by law as a self-employed individual, if your income is higher, your taxes are higher. What we look at, if you miss $100 of tax deductions, you're going to get that 15.3% on that. That's $15.30 you're going to pay in tax. Doesn't seem like much. Then whatever your marginal tax rate is, we'll say 20%, you're going to pay another $20. So $35.30 is going straight to the government of every $100 that you make. That's crazy. So every $100 you save, you get to put that in your pocket. Every $100 you move from spending of after-tax dollars into pre-tax dollars, you're going to save a lot of money. And that's what our goals are going to be. And so, how do we do that? We look at every business expense. We look at every deduction. We look at ways of moving that money. What you're looking at is saying, hey, this is what we do personally. Maybe it relates to business. So if it's going to be business, it needs to be on the business side. If you forget and you start running some business expenses through a personal checking account, you don't always track those. So we tell people, hey, you've gone into business. Make sure first and foremost, you set up that business checking account because you're in business. Get that business checking account set up so that we can start tracking everything that goes through your business. Now, run all your business expenses through it. Now, those business expenses, are going to be ordinary and necessary per the IRS tax code. Those business expenses, can be everything from your personal cell phone that you're using for business. Now, it's only the percentages of it, meals and entertainment, and then everything that relates to business that you do. So if you're using maybe a home office, you're using internet, part of that could be applied to it. If you've got a office in a building, maybe you're renting, now you can take that rent. You can take the other business expenses that relate to it, utilities, you name it, that goes through and does that. So we're looking for everything that you have in business to make sure that you get those deductions. Now, our bookkeepers here at our offices, both Taxation Solutions and TruckerTaxTools.com, when we get into bookkeeping, our bookkeepers are going through thoroughly your bank statements to make sure that we have all the I's dotted and T's crossed and we're getting all the expenses. Now, we also run our profit maximizer and expense calculators to say, hey, you're missing these expenses or you're missing this. Excuse me there. As a truck driver, we go through settlement statements for you to make sure that every deduction on there is legit, to make sure that you're getting every write-off that you need. And, moving your expenses through the system. So when we start looking at tax planning, we're also looking at not just the pre-tax and after-tax dollars, but other ways of reducing your income tax rates. So if you've got money that's invested, we start looking at maybe earning some non-taxable income. We also look at ways of maybe shifting income to future years and to lower tax rates or lower brackets. And then maximizing every deduction, every credit. There's credits sometimes for energy efficient homes and stuff. There's credits for some fuels that are used, specific fuels. And we're going to look at all these things to be able to get those deductions for you. And so why do we again spend so much time talking about tax planning? Because you're going to lose every time you spend after-tax dollars that could have been pre-tax dollars. We go back to that savings out there and what it can save you in moving those dollars into pre-tax dollars instead of after-tax dollars. Now, when we're going through and do this, we spend a lot of time reading the tax code. We spend a lot of time looking for every deduction. Because when the government changes the tax code, we need to know the ins and outs when things take effect and how to help you, again, make the tax code work for you. Whether you're a W-2 employee trying to find ways to reduce your taxes, or whether you're self-employed and looking for ways to reduce those taxes. We always say in our business that some politicians have never met a tax they don't like. Matter of fact, they always talk about, hey, taxing the rich, taxing this, taxing that. And then some politicians have never read what they vote for. They just think, hey, this is the best thing that we have going out there. And when we talk about looking at government tax plans and what the government's going to do and how they're going to tax you, everyone is always good when the tax is on someone else. So when somebody else is going to get taxed for your benefit, you think that's a great tax. And matter of fact, most celebrities are great at discussing taxes and increases, but they don't really want to pay them themselves. And that's why they do tax planning. If they really wanted to pay more, they could just write a check and not increase the taxes or increase the complexity of the tax code. So that's the fun part about what we get to do for you, is to find ways, again, in tax planning to reduce the taxes on you as an individual. Hey, we're going to take a short break. And after this, we're going to have some great news for truckers and talk about trucker per diems and what's going on for per diems. And we'll be right back after this.
The IRS never sleeps. If the IRS says you owe them money, they can and will garnish your wages, levy your bank account, and seize your home. Simply put, they will make your life hell. If you owe the IRS $15,000 or more, what you need is a solution, a taxation solution. You need a company you can trust. Don't face the IRS alone. Call Taxation Solutions now. We go to bat for you. Don't hesitate. Waiting will only make it worse. Call Taxation Solutions today. We solve tax problems for you.
Hey, welcome back. Again, subscribe to our podcast. You can go to taxtalk4u.com. There'll be links in there. You can get in there and subscribe and join us. Put this on your calendar every Mondays, 10 a.m. Eastern time. And if you miss us, you can go find us on our podcast at iHeart and a bunch of other sites out there that you may be listening podcasts on will be there. we're talking about what's happening in per diems. This was great news that just came out. The IRS is actually increasing the per diem rates for truckers. So if you're an owner-operator, over-the-road truck driver, you're away from home, you get to deduct per diems or actual meal and travel expenses. Now, in the trucking industry, meals for truckers while you're on the road are deductible at 80%. So it's a little bit above what you get to deduct as meals and entertainment for most individuals. And this comes in the transportation code area. And you can make that deduction. So what they've done is, back in about 2021, they increased the per diem rate to the $69 per diems, effective October 1st, 2024. We have gone up to $80 per night. Now, IRS publication 463, travel, entertainment, gift, and car expenses allows for a standard meal and incidental expense deduction for those in the transportation industry. So you're either going to save all receipts for meals and incidental expenses, or you would take the IRS standard meal allowance, which was 69 and now going to be 80. So January 1 through September 30th, you're going to have the $69 deduction. After October 1st and on through the end of the year and into 2025, you're going to be at the $80. Huge increase in deductions for the trucking industry. So you're going to want to make sure that you're keeping track of your nights away from home. So a little bit about how per diems work, for you in the trucking industry. In tracking, you can use your driver's logbook to verify the eligible nights that you're away from home. Remember, the first and last night are only deductible at half of the per diem rate. The other nights in between are at 100%. So we like to just count, the first all the way through the last day of travel, not the next day. So, want to go through and make sure you make that accounting of your days and make sure that you've got a good number out there. And it becomes really important because you have a distinguishment between how many days we're on the road from January through September, and then from October through the end of the year. Now, the IRS does have certain qualifications, for truckers to be able to be eligible for per diem deductions. And so you've got to meet all the qualifications, and the IRS has established specific criteria for this transportation industry to claim the standard meal and incidental expense deduction on your taxes. And so you've got to be employed in the transportation industry. Your job must keep you away from home on a regular basis long enough for you to sleep away from home. And your job must be directly involved in moving goods or people. This could be by truck, train, bus, ship, airplane, barge. All of that is in the transportation industry. Other qualifications the IRS has, and this is a big one, just to be able to claim this deduction, is you must have a tax home. That's right, you must have a tax home, a place that you go back to lay your head down. To qualify for this tax home, you're required to incur expenses to maintain the home while you're on the road. Okay, remember, you gotta incur expenses to maintain this home while you're on the road. So somebody asked me the other day, hey, I'm living with family and I don't pay anything, I've got a tax home. No, you don't. Get a lease, pay them for that room, rent an apartment. You've got to have a tax home where you're going to be able to go home and sleep whenever you do return at home. Sleeping in the cab of your truck does not qualify in the transportation industry. If all you have is that truck, you basically have what we would call in this industry a tax turtle, meaning that, hey, you're sleeping in your home on the road, wherever you may be. So you want to make sure that you're getting all those deductions. Now, from 21-22, we did have in the meals and entertainment industry for truckers, the deductions were 100%. Starting back in 23, going forward, they're only at 80%. Now, the other big thing with per diems in the tax industry is going to be, you got to be able to track your overnight travel. Now, we tell you, hey, use your ELD logs, use a paper log, but use something out there to make sure that you're tracking your nights that are on the road and away from home. Now, what about per diems as an employee? If you're in the trucking industry, employees do not get to deduct per diems. The 2017 tax code eliminated the unreimbursed employee expenses. So those were eliminated, and it affected a lot of people that were used to taking per diem deductions. Now, we have worked with many, many employers to change the way they compensate you as the driver. So the employer can pay you a per diem allowance. It has to be based on a fixed amount of daily reimbursements that an employer gives to an employee for lodging, meal, incidental expenses when an employee is away from home. And it cannot be more than the federal per diem rates. An employee has to be able to approve dates, places, and business purposes as well. If an employer puts a per diem program in place, there's a lot of savings out there for the employer and the employee. But as an employer, the old rates could save an employer roughly $1,500 a driver each year. The new rates is going to save them around $1,740 a year per driver. So if you've got many drivers out there, that it can become quite a bit of savings for you just by putting a per diem program in place. And you can contact us and let us know, and we can work with you to put that per diem program in place as well. So these are the kind of fun things we get to do in our tax planning and working with not just owner operators, but small business employers, as well as you're getting set up and moving down the road, and maybe adding more employees, more drivers. Maybe you're self-employed and you're looking for ways to reduce taxes. That is what we do. I told you at the beginning of this, we're hitting everything taxes. So, today's program, we're going to talk a little bit about tax relief and maybe the IRS Fresh Start program. And what does that mean for you in reality if you owe the IRS or going through a tax problem? And how can you deal with these tax problems within the framework that is out there for the IRS? And we're going to discuss this just after this short break, and we'll be right back in a minute.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back to the show, Tax Talk for You. Again, subscribe at taxtalkforyou.com. Don't miss any episodes coming up. We're just scratching the surface on taxes here on Tax Talk for You. If you're self-employed, if you're owner-operator, truck driver, maybe you're just looking to get out there and try to figure out what's the right way to set up your business, maybe what's the right way and the right tax strategies to move yourself forward and get as many deductions as possible. Hey, this is the place to be. Or maybe you're dealing with IRS problems, and I'm sorry if you're going through that. We deal with people so many times that have IRS issues and are dealing with the IRS and dealing with the collection agencies that are hired by the IRS to collect every dollar they could possibly collect from you. And, you hear the commercials out there and you hear the scare tactics that are out there. Yes, the IRS is the biggest, baddest collections agency in the world. But the IRS has rules to follow. And those rules are set forth by our Congress. And those rules are set forth by the president. And, they've got to follow certain rules, and you've got certain rules and Bill of Rights as well. And we'll discuss Bill of Rights in a future episode here, and talk about things that the IRS can and cannot do. But what you hear out there a lot is about the IRS Fresh Start program. Now, if you hear me talk on Ask the Experts, or you've heard me talk on some of the other radio stations that are out there that have had me on, and we've talked about taxes and IRS problem resolution, and if you're going through IRS audit and everything, we talk about the IRS Fresh Start program, and I consider that more of the IRS Fresh Money program. I wish they had titled it right, because they want fresh money, from you, the taxpayer, or those that have been avoiding taxes and now have, hundreds of thousands, or even 10,000, 20,000, 50,000, whatever that number is. The IRS wants your money. And that's what the Fresh Start program is let's get you a fresh start, get fresh money into the IRS. And so they've made some of the qualifications for some of their programs a little bit simpler, or they broadened the horizon, or they made it sound really good. The simple part of the Fresh Start program is you can call the IRS, and if you owe under $100,000, you can pretty much get on to a installment agreement to full pay it within the statute of limitations. Hey, that's no fun. If you owe, $50,000, $60,000, $100,000, and they want to put you on a $1,500 a month payment plan, if you can afford it, great. You're going to be on that payment program. Some of the other areas of the Fresh Start program and the Fresh Start initiative, as they would call it, is the offer and compromise. Not everybody qualifies for it. If you've got assets, ability to pay, equity in your home, you may not qualify for this. And, there's a lot of firms out there that are going to talk about, you call them up and they say, hey, you qualify under the Fresh Start program. and we're going to get you a settlement to pay, God forbid, we talk pennies on the dollar, pay less. That is not always true. Did they go through a full financial report? So what's going to take is for you is one, you can go to the IRS website and you go to irs.gov and look it up, offer and compromise, and you can put into their program, right there, and it'll tell you, hey, do you qualify for an offer and compromise? Now, does that make it right? No, because there's ways around certain things that the IRS has within their system that we can help you qualify for. And maybe we can change the way you do things in your life to meet the standards that the IRS has to show that you don't have the wherewithal. Maybe you can't access the equity that's in your house. So we're going to try to find ways to get around, the IRS requirement of, accessing that equity. Maybe you have retirement accounts that have a lot of money in it, and maybe you're in retirement. And we're going to try to find ways to get around the IRS requirement of pulling money out because you need that money to live on. And so we can avoid some of those things for you as well. So the Fresh Start program in their initiative is to find the ways to get you to pay and get you back being a good, compliant taxpayer. Now, sometimes that makes life really difficult. And, we have, dealt with people that when we're sitting down and looking at their numbers, there's just no way possible. But then again, there's other people out there that maybe you have $500 or $1,000 left over per the IRS, may not be per you, may not be based on your lifestyle, the way you're living, but the IRS has what they call national standards that they've got to use to decide, hey, can you afford to pay the IRS back? So maybe we've got to change what you're doing. And maybe you're driving an old car that needs repairs, and we can get you to buy a new car, and then that would qualify as a deduction and lowers that maybe $500 or $1,000 you have left over to nothing, or maybe $100 or $200, depending on where we can get with insurance and the car payment and everything out there. We've got to work with you to make sure that this works. We've taken some people that have money left over, put them on a installment agreement, and instead of being a full pay installment agreement, we've managed to work with the IRS to put them on a partial pay installment agreement where for the next 4 years, they're going to pay $125 a month or something that when it's all said and done, the IRS will write off, $20, $30, $40, $50,000 of tax debt because the statute of limitations will run out. So give a good example. We had a taxpayer that owed $80,000 to the IRS. We managed to put him on a program with the IRS at $125 a month for actually 3 years. The first year, $10,000 worth of debt fell off because the statute of limitations ran out. Now, statute of limitations is 10 years from when that tax return was filed and accepted. So if you have a tax return that was, filed back in, let's say October of 2014, well, right now you'd be coming up, the statute of limitations would run out within a month. But 2015 will run out, next year. So, putting a program in place to watch these statute of limitations roll off as you go. Or maybe you didn't file back taxes for a few years and you've got several years that are going to fall off in a year or 2 or 3. This program would allow you to run out the statute of limitations and whatever that debt amount is. So the person that owed $80,000, we were actually able to watch, about $15,000 roll off that first year, another $10,000 roll off another year. And by the end of the third year, it 100% went away, other than the $100 a month or $125 a month they paid for roughly 3 years. So quite a bit of savings for them, putting the program in place the way it needed to be and doing the things to adjust their lifestyle or adjust what they're paying for to make things work. So in this case where, we got them to go out and buy a new car, the $500 and some odd dollars they were paying a month, it was just basically like the IRS paying for their car, because they would have paid it to the IRS, but instead they paid it on the car note. And by the time that we were done, they had a new car that was almost paid for. They may have another year or so to pay for it, but it got them the benefit of getting rid of tax debt in a very quick and very easy fashion. Now, that doesn't work for everybody. You need to consult a good tax professional. I always tell people, hey, consult with an enrolled agent. People ask me all the time, hey, what is an enrolled agent? Well, an enrolled agent like me, we are licensed by the U.S. Department of Treasury to represent you, the taxpayer, to the highest levels of the IRS. That's right, we represent you. The funny story is that, hey, when I became an enrolled agent many years ago, my father had asked me and said, does that mean you work for the IRS now? Oh, no. I work for the American taxpayer. I work against the IRS. I find ways to save you, the taxpayer, from the IRS and from IRS problems. That's our whole job. See, way back when the tax code started, they needed somebody to represent taxpayers. And it came up with this designation of enrolled agents. And you had to go through testing, and you had to pass a test. And now we have to go through a full FBI background check. And then we have to have 30 hours plus of continuing education to maintain our license so that we can represent you against the IRS. So the real nice part is we get to fight the IRS. We get to fight on your behalf. And we get to fight, to save you money and find the ways to get you the best settlement allowed by law. So that's why you come to companies such as Taxation Solutions, and they offer the free consultation for you. All you got to do is pick up the phone and give us a call. We're going to represent you to get you that savings, to get you the settlements that you need to move forward with your life. As you hear in the commercials, Fresh Start program, and get you a fresh start. We're not trying to give you fresh money, your money freshly to the IRS. We're trying to keep the money to you so you can hold on to it and not have to, give it to the IRS. And you can connect with us at taxationsolutions.net. The other thing is, as a trucker, over-the-road owner-operator, hey, we work with you. We are specialists in the trucking industry. If you go to truckertaxtools.com and look at our bookkeeping services, look at our tax services that we do representing you. And if you're a truck driver or you're thinking, and maybe you're a W-2 driver thinking of going out on your own, hey, OOIDA, Owner Operator Independent Drivers Association, is running a great seminar here coming up in just about 2 weeks. We're away from it, and it's going to be in Missouri. It's called Truck to Success. If you can't join us this year, join next year. I am a speaker at this program. I also get out and speak at various truck shows like Mid-American Trucking Show or the Texas Trucking Show. So get out there and see us. Hey, this has been a great program. We really enjoy bringing Tax Talk for you here. Get in and subscribe at taxtalkforyou.com. Be here every Monday, 10 a.m. Eastern Time. look forward to talking to you. If there's certain topics you want to hear, message us and get it out to us either at truckertaxtools.com or taxationsolutions.net, and we will bring those things to you. I appreciate it being here. Again, click with us, link with us on Facebook. We'll make sure that we have dates and times of every one of our programs and how to connect with us. We're here. So stay on after the show and Ask the Experts, I think, is following us. This is a great program that we have. Thank you very much for being with us at taxtalk4u.com.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.